name is Nicolas Link, also known as Nick. I'm the chairman of CGRA, CGrowthCapital. First part of this clip is just a really high level, from a helicopter view on the overall company, and then we'll dive down into the two actual operating subsidiaries in much more detail. So at a high level, we are we're an operating company of alternative assets. That's really the crux of it. Now, we've underneath that, and the crux of the operating company, meaning we're not an investment company. We don't just buy and hold it on our balance sheet and hope for better days. We actually buy and build. We acquire companies where we can acquire them, add value, add skills, add people, add capital, add strategic value, and actually grow them to be worth a substantial amount of money to our shareholder base. Now, there's obviously always two sides to the coin, on what some people believe will be a future value of an asset and what is a non-valuable asset, and only time gives us the answer. So, ultimately in our company we've got two operating subsidiaries. One being the sports tech business, which we'll talk about in great detail later, which really has got unbelievable potential. Right now it's still a little bit like a hobby business, as we've been developing, and we'll talk a lot about it in the sports business. And I say hobby just purely because of the revenue, not because of the amount of activity. We've now grown that business phenomenally. There's a hell of a lot of people working behind it, some seriously high-level experts. I didn't know a lot about retail before we got into that business, which is why we brought on some top consultants who have been positioning some of the best products in the world in the sports field. Again, it's a whole nother conversation, which we'll get into when we talk about the sports business. But that business ultimately will be worth something substantial in the future. But as 2024, we go into 24 and through the later part of 24, should be very, very cash generative. It has very, very high margins. It's a very scalable globally, and should be a very desirable business, which in the end of the day would probably be quite likely for a trade sale once we've built some critical mass of a few $100 million of revenue. It's a nice, very simple, easy, straightforward business model. So watch the space for some more information on the sports, which I'll talk to you about. So then it leads us on to the second part of the business, which is the mining, CGRA mining. Now that business is, we're underway with our first mining asset. Again, there's a whole separate clip on the mining business on its own, but we would expect to grow that into the hundreds of millions of revenue or hundreds of millions of valuation in the very near future. Again, this is not investing advice. This is not economic advice. Do your own due diligence. I'm not trying to sell you a stock. That's not the purpose of this. It's just to inform you of the business and where we're trying to go with the business, and tell a little bit more about sort of how we've got through 2023 some of the strategy that we set off on, which is has been put on PRs and on previous vodcasts I've done, but I want to kind of bring you up to date with where we've got to now and what kind of the next chapter is, and then the PRs will follow, and as those PRs start to come out, they'll make a lot of sense to you and you know what we're talking about. So answering on some questions on, we kind of repetitively get emails and tweets and I don't know, whatever else, phone messages, etc. on why not oil? This was an oil business. Well, there's a number of reasons to that. So when we took over, it was relatively underperforming business. Now I know you guys will probably point the finger at me and saying it's now underperforming because our stock price is so low. The stock price isn't the business. All right, so I'm talking about underperforming, I'm talking about cash flows, profit and loss account, balance sheet. That's the performance of the business. And then the stock price runs parallelly. And obviously that's the skill that I have to have, and that's my job to make sure that when our business is performing, our stock price is performing alongside it. Now, it's not in my control, it's not in my hands, there's very little I can do about it, but bring the awareness to the shareholders and the awareness to potential shareholders about our business, and make sure we're delivering the fundamentals, because the fundamentals at the end will end up on the scoreboard, on the share price. They always do. But it sometimes takes time. As I've said in hundreds of other videos, it's a process and it takes time. You can't build something, you can't build a business worth hundreds of millions in 3 months, 6 months, or even a year, unless it's some tech invention. Hard graft business takes time. And it takes a particular type of investor, a particular type of trader, a particular type of shareholder who has the appetite for that patience, who has the appetite for that long-term gain. And there's no short circuit to that, as much as I wish there was. So coming back to the point of why not oil? Well, when we took over the company, there was a whole lot of bloated assets on the balance sheet. In my opinion, this is not disrespectful to the old management team, but let's say overinflated values, or values that I don't believe would have ever yielded the real value to shareholders. And that's my job. My job is to bring you value over time. So I didn't believe those businesses, those assets would ever deliver a real value to you. The cost of them to basically maintain them, keep them, uphold them, and develop them on was too great for the reward that it would have brought. Also, in the time and era and the generation that we're going into, I didn't believe that was viable. One, we've got a government anti-oil, so that's obviously not helpful in our particular business if we're sitting on oil assets, especially oil assets that we probably can't do anything with anyway. But we're now under the microscope. Secondly, relating to the same point, is that the world is moving on. So while oil will still be around, certainly for my life, and probably most of your lives, it is definitely on a downward curve in terms of certain sectors, being the biggest sector, being automobiles. That being said, those of you that watched my macro video, a little bit earlier, EVs have also got their challenge, but I think EV technology will develop a lot in the future and become much more pliable, much more usable, much more user-friendly, much more cost affordable, much more practical, basically. It's inevitable that we can't fill our cars with oil for the inevitable future. That's pretty obvious for a whole bunch of reasons. Whether it's just resource capacity, whether it's environmental issues, whether it's about availability to the resource from different governments, political issues, whatever. The point being is that we're going to move away from oil over the next 10, 20, 50, 100 years. That's inevitable. That's a given. I don't think anyone can argue with me on that. The speed of it and how and what we're moving to, I think, is an open question debate. But therefore, why would we be wanting to invest and develop in assets which already, in our opinion, were not particularly strong, would cost too much to do, against the political will, into a sector which potentially is not going anywhere in the future? So that was part of our driver behind it. We felt if we're going to build a business for the long term, we need to build a business in a sector that is likely to replace the outgoing. So what's going out, something new is coming in. It's not disappearing, it's just a change. So we're at the cusp of that change. Let's rather be in the space where we can embrace that change and create value. Ahead of the curve, ahead of other people. So while people are still thinking oil, we want to be ahead of the curve and be thinking what's coming next, because these things take time and it's a process. So by the time there's that switch starting to come, we want to be at the front of the game, which we did. We did well, and I believe we've executed well. That which obviously leads us onto our mining. So obviously there's going to be a move from fossil fuels. It's inevitable, to EV, or E, if we want to call it that, power generation in some way. What is the some way? I don't know. But, we've got a pretty good idea. And obviously that leads us into various different rare metals or minerals in general, whether it would be lithium, whether it would be graphite, using graphite, cobalt, nickel, copper, all of these things are used to use batteries for more or less whatever type of batteries we're going to use. There's going to be probably a combination of those or various different other minerals. Therefore, that's the space we want to be in, as opposed to pumping out oil out of the ground in a potentially dying market that's going to cost money. And we also have an unknown, effectively an unknown reserve and an unknown future, which I don't think is great for you guys. So, that led us on to pushing into the mining space, which I'll talk about in a separate clip about mining in general. But that hopefully answers your oil question, because I don't think a day goes by where I don't get an email about oil. Guys, we don't believe we can add value to any oil assets that were in the business now or in future. That's not saying we would overlook something if it came along and it was the right asset and we could add value. Then of course we would take it for you. For our shareholders, of course we would take an opportunity that we felt we could add value. But we don't believe what we acquired had any value for you. So that being that, we're left with two great operating businesses. Also, an operating business is going to be very cash generative, and a business is going to become really, really valuable in the medium to not even long term, the medium future, and growing exponentially. So let me come back to mining in a while. So in terms of the actual operating company, CGRA in general, As I've said in some of my previous videos on, I think even on CGRA, but on some of the other companies we're involved with, and certainly on my macro spiel, raising capital this year has been particularly hard. So we needed to really find good quality money because this business has got serious value going forward. And finding any money is difficult, let alone good quality money, especially on CGRA being a non-reporting company, which we intend to change in the future. We do intend to take it fully reporting as soon as it's viable and possible, and makes sense both to the inner house management and to the shareholders and to the SEC. There's a lot of things we're cleaning up and kind of getting this thing in shape for that. But you have my word that we will become fully reporting at some stage in the future, and not even long future. When I say future, I'm talking 2024 at some point. So, but I'm not putting a date on it, and that's not a noose around my neck. When the business is ready for it and sustainable and can maintain that, then we will go down that route. So, coming back to the basic business, we need to raise capital, which I'm pleased to say we have done. We've raised $1 million of initially $1 million, which has already come into the business, of preference share capital. So it's not convertible notes, it's not debt finance, it's preference shares to a family office in Dubai, who are heavily in the mining sector. They understand mining and have some relatively strong ties in the sports field as well, but primarily around mining. And they are basically come to the table, bought in some preference shares of $1 million worth, and really going to ride this journey out with us and help us drive the mining side. They bring a lot of expertise and a lot of capabilities to the table, and a lot of contacts beyond what I already have. So we're now comfortable that deal closed in the last few days, by the way. So we're now comfortable that we've got the assets, we've now got the capital. We've brought on a lot of consultants into the business while we're filling gaps, building our own team. But we're confident in building our team out through 2024, because the team and the people are half, more than half of what we need to deliver. Money, people, and assets. With those three, we can create great things. And now we've got the money, we've got the assets, and we've sort of got the people. But we're going to keep building. So hopefully that gives you an overview of the company in general. While we've obviously been watching the share price, diminish, and brings tears to my eyes. Sure, it brings tears and sleepless nights to a lot of you guys. I'm not concerned about it. I'm not even vaguely worried about it, because we're now going to start to see, again, not investing advice, not trading advice, but I think we're going to start to see a reversal of that. I'll be very surprised if we're not well into the sense, very, very, very quickly. One thing we've got a very good position about in this company is our float. And I know some of the traders will argue and say we need a smaller float, you need a tight float, blah, blah, blah. I have a slightly moderate view on it, that in the OTC market, that more tight float doesn't work, as we can see with one of the other businesses I'm involved with called QIND. It's got a very tight float and it's very, very hard to create liquidity. I know that business is in a quiet period because it's about to be uplisted, but even prior to that, you're typically going to trade like if you can trade 1 or 2% of your float a day. So it's about having the float critical mass to be able to get that 1 or 2%, creating the liquidity. And why that's important, because of raising capital. So I know it's this, chicken and egg, double-sided coin. Well, you want a higher share price. A high share price without liquidity is useless. So if we only have 100,000 shares out or 10 million shares out and we get our share price to $6, great. But if nobody's buying and selling, it's not worth $6, right? And most importantly, the liquidity equals funding, because any funder that comes along, non-equity funder, not like the preference capital that we bought in, but I'm talking about debt finance or leverage finance or any of the finance through any of the family offices, the hedge funds, etc. They look at the liquidity. They're saying, okay, we're going to give you 500 grand, $1 million, 2 million, whatever it might be. If we need to liquidate our position, you don't pay us back. We need to convert and liquidate our position. How long is it going to take us to get out of this position? That's what they look at. And that's then where you've got a balance between share price and trading volume. So too low share price, no trading volume; too high share price, no trading volume, is all useless. The right share price with good volume, good liquidity, and it's good for you guys. It's good for the traders knowing that they can, place an order or a sell and it's filled within seconds. They're not sitting waiting for hours or days for their order to be filled. So I believe CGRA is in a very, very good position on that. We have thousands and thousands of shareholders, thousands of traders trading the stock, and as you would have seen, it doesn't take a lot of news and a lot of information, a lot of updates for the liquidity to move, from 500,000 shares to 3 or 4 million shares. So the liquidity it has got the potential, very, very well, in my opinion. And the assets we're bringing are serious values. So, again, not trading advice. I'm not saying buy a stock. I'm just saying, that the facts, the way I see them from behind my desk, is I think we're well positioned for a 2024. And as we talk through some of the mining assets and talk through the sports assets, in separate video clips, I think you guys will start to see that. So I'll wrap it up there. Hopefully that is, enough on that for now. So I'm going to do my normal trick. I'm going to come back to one wrapping up topic. If those of you that watched my macro video, you would have seen me talk about the change in trader behavior. Because we've been criticized a lot for not putting out enough news. People don't know what's going on. Well, firstly, people do know what's going on. Those that have read the PRs, the previous PRs, and watched the previous videos will know exactly what's going on. We've said what's going on, and we're delivering on that. What we perhaps have been weak on and haven't done is we haven't portrayed the updates, the continual updates to the market. And I put my hand up and say perhaps I'm guilty of that, and I apologize for that. But coming back to my macro video where I talk about traders' behavior, it's pretty important that we understand that the trading behavior and the interpretation of data from people has changed. The dumb money is gone from the market. No longer do people just rush after an influencer's comment. Somebody saying this stock is great, buy it. And then 4 minutes later saying a different stock is great, buy it. Those days are drying up. They have gone, they are going, and they're going to continue to go. You're now left with the more patient traders who research, they read, they understand, they study, they buy, they hold. It's kind of a different type of trader, hence why liquidity in a lot of the markets traded up, dried up. I know a lot of them have been wiped out because their portfolios have been wiped out. I'm talking in general, we're left with a slightly different trader that's left trading, predominantly, not totally, but predominantly. And they don't want to see fluffy PRs. They don't want to see stuff that doesn't have any substance behind it. So general update PRs just saying this is what we've done, just falls on deaf ears. And PRs cost a lot of money, and ultimately we needed to be able to, for CGRA's next phase of growth, we need to be able to say, both in terms of the stock price, market cap, and real business, real valuation, shareholder following, etc. We need to be able to PR, but with substance and with fact and verifiable facts. The trust has gone out of the OTC. Whether the trust has gone out of me or trust out of the OTC in general, trust out of the markets in general, is all open for debate. I'm not concerned because everything I've ever said I'm going to do, I either have done, will do, or are doing. These things take time, as I've said repetitively. It's a process. Things can't be done overnight, as much as I wish they could. I'd love to do them all overnight and go and sit on a cocktail bar in Bahamas for the next 55 years. That's not reality. The reality is we've got to slog this out for the next 2, 3, 4, 5, 10 years and build these businesses. Build strong, solid management teams. We're not building a share price for tomorrow. We're building a share price and a share portfolio for your kids' kids. And that takes time. And obviously that journey hopefully changes on a daily basis. So you're in at a nothing position now. In 3 months' time, you're at a better position. 6 months' time, you're at a better, and slowly, it grows. But that takes time. And that is my, daily driver on a daily basis for all the businesses and all the shareholders we have across all the businesses, is to build the management teams, build the company strategy, build the productivity, fund the capital, and make sure those teams are delivering the value for the shareholders. That is what I strive for on a daily basis, and I will do and will continue to do. That's what drives me on it. Personally, I thrive on that. So, so coming back to wrapping that up, you'll start to see much more activity. Now we've raised the capital, and we'll start to kind of tell you all about the fundamentals and the milestones we've already delivered this year through each of those two businesses, and now where we're going. But that'll all come out of PRs. That'll come out another short video on each one. But ultimately, it's all verifiable, and people will be able to actually see it and feel it and read it and taste it, and have a lot of confidence in both the company, the management team, me, and the share and the stock price, and hopefully that'll start to reflect in time. So I'll wrap it up there. I really will this time. Thanks very much, and you can wait for a couple of videos on the sports and on the mining in the near future. Thanks very much.